If you want to build wealth over the next decade, there's one sector you simply can't ignore: technology. We're in a period where innovation is moving faster than ever. AI, robotics, advanced chips, automation, renewable energy, and the companies leading these waves could shape the next generation of millionaires. So today, we're breaking down the top tech stocks to watch if you're investing for the future. No hype, no noise, just long-term opportunities based on demand, fundamentals, and innovation. Let's get into it. Technology isn't just a sector anymore. It's the foundation of almost every modern industry. Car companies compete on software. Banks compete on AI and automation. Retail competes on logistics and data. Even agriculture uses robotics and advanced analytics. This is why tech continues to outperform. Tech companies scale faster, innovate quicker, and create new markets instead of fighting over old ones. If you're thinking long-term, 5, 10, 15 years, tech remains the engine of future growth. Now let's break down the companies that deserve your attention. The first stock to watch is Nvidia. Nvidia has evolved far beyond gaming GPUs. Today, it sits at the core of the global artificial intelligence boom. Almost every major AI model you hear about relies on Nvidia's hardware. As companies race to build stronger AI systems, demand for Nvidia chips keeps climbing. AI adoption is still early. Cloud providers are spending billions on GPUs. Tech companies are upgrading their AI infrastructure. Autonomous vehicles, robotics, and data centers rely on Nvidia architecture. And because Nvidia doesn't just make hardware, they also build software and tools for developers, they have an ecosystem that's incredibly difficult for competitors to break. For long-term investors, Nvidia isn't just part of the future, it's helping build it. Next is Amazon. Most people associate Amazon with online shopping, but the heart of their business, the real profit driver, is AWS, their cloud computing platform. AWS powers startups, government agencies, global corporations, and even parts of the AI models being developed today. Why is Amazon a tech stock worth watching? Cloud adoption is still expanding. Companies worldwide are moving from traditional servers to cloud-based systems. Amazon is integrating AI directly into AWS, giving businesses more efficient tools. Behind the scenes, Amazon is also transforming its logistics network with robotics, automation, and advanced data systems. Add in their growth in digital advertising, healthcare tech, and smart home devices, and Amazon becomes a powerful all-in-one future tech play. The third stock is Tesla. Whether you love or hate Elon Musk, the truth remains. Tesla is not valued like a traditional automaker because it isn't one. Tesla is a robotics, energy, and software company disguised as a car manufacturer. Tesla leads the electric vehicle ecosystem, but its future value may come from other areas: autonomous driving, robotics, energy storage, and manufacturing automation. Their self-driving system relies on real-world driving data, something few competitors have at scale, and their energy division, including solar and battery storage, is positioned to benefit as the world shifts toward renewable energy. Tesla is volatile, and that scares some investors. But in terms of future industries, transportation, automation, and clean energy, Tesla is in the middle of all three. Fourth on the list is ASML. This company flies under the radar for many everyday investors, but it is one of the most important tech companies on Earth. ASML builds the machines required to produce advanced semiconductor chips. Without ASML's EUV lithography machines, companies like Apple, Nvidia, AMD, and Qualcomm cannot create cutting-edge processors. ASML essentially holds a monopoly. They are the only company in the world capable of building EUV systems. As AI, cloud computing, and advanced devices grow, chip demand skyrockets, and that means ASML's importance only increases. Governments are also investing heavily in semiconductor independence, which puts ASML in a powerful position. If you want a company that wins no matter which chip maker dominates, ASML is that company. Fifth on the list is Alphabet, the parent company of Google. Alphabet remains one of the strongest long-term tech plays because its products are deeply woven into daily life. Search, YouTube, Google Cloud, Maps, Android, Chrome, and Workspace. But the real story for the next decade is their investment in artificial intelligence. Alphabet is building some of the world's most powerful AI systems. Their cloud platform continues to grow. YouTube remains the #1 video platform globally, and Google's research capabilities give them an advantage in emerging technologies like autonomous driving through Waymo and advanced computing. Alphabet combines stability with innovation, making it a strong watchlist stock for future-focused investors. Our sixth company is Palantir. Palantir creates data systems used by governments, militaries, and major corporations to make rapid and accurate decisions using artificial intelligence. Their platforms help detect threats, manage logistics, identify fraud, and optimize operations. What makes Palantir interesting is its unique position. Governments around the world are adopting AI faster than ever. Defense spending is increasing. Businesses are trying to use advanced analytics to stay competitive, and Palantir is expanding its commercial sector rapidly. It's not a traditional tech giant yet, and it tends to be volatile, but its role in AI-driven decision-making makes it a company worth watching for the next decade. Now, beyond individual companies, there are entire emerging tech sectors that could explode in the coming years. These include artificial intelligence software, semiconductors and chip equipment, robotics and automation, autonomous vehicles, quantum computing, clean energy tech, and even space technology. You don't have to chase hype, but paying attention to where the world is moving and investing early in the right trends can change your long-term financial trajectory. If you want exposure to tech without picking individual stocks, you can use ETFs. Options like Q, V, G, T, SMH, or AR, KK give you broad exposure to innovative companies without the risk of choosing just one. This is a simpler way to benefit from tech growth if you're new to the market or want to diversify. The future will be built on technology, AI, cloud computing, robotics, chips, automation, and clean energy. The companies we covered today aren't just major players in today's market. They are shaping the world we'll be living in over the next decade. You don't need to rush into anything. You don't need to follow hype trends blindly. Tech investing rewards those who research, think long-term, and stay patient. If you found this script helpful, make sure to like the video, subscribe to the channel, and comment which stock or tech sector you want me to cover next. Thanks for watching, and I'll see you in the next one.